Brought to you by Homeowners Financial Group, your award-winning mortgage company.
Hi, I'm Michelle Beyer with Homeowners Financial Group. Welcome to the Market Minute. Benjamin Franklin once said that by failing to prepare, you are preparing to fail. This is sound advice and exactly the mindset you should have before buying a home. So what does it mean to prepare? Webster's meaning is to make ready or to fit, to fix, or groom. For most of us, buying a home involves obtaining a mortgage. Getting pre-qualified for a home loan should always be the first step the prospective home buyer should take. But is getting pre-qualified enough? A basic loan pre-qualification is a simple process whereby you supply your bank or lender the basics of your overall financial picture. Typically, a pre-qualification is conducted on the phone or by internet. Your lender will ask questions about your income, debt, and assets to get an idea about how much of a mortgage loan and payment you can afford. Often, your lender will pull a basic copy of your credit report to make certain you have the credit history necessary to qualify. While getting pre-qualified is the first step, it can be helpful. It does not go into the depth and analysis that a pre-approval will. While they sound similar, a pre-approval requires you to provide your tax returns, pay stubs, bank statements, and employment information. When the lender has this information, they can review it more closely and confirm your exact financial picture. Typically, your lender will also order a more complete and extensive credit report from all three major credit agencies. Equipped with this information, your lender will be able to provide a much more solid picture for you of what kind of loan you'll be pre-approved for. The difference between a pre-qualification and a pre-approval can also make a big difference to the seller when you submit an offer. If the seller knows you've met with the lender and have already physically provided the necessary documentation and are pre-approved, this could put you at a big advantage versus another buyer who is simply pre-qualified. Now back to being prepared. When should you take the first step and get pre-qualified and ultimately pre-approved for a home loan? A. Immediately before I submit an offer to buy a home. B. Immediately after I submit an offer to buy a home. C. 30 days before I start searching for a home. Or D. 6 months prior to the date I think I might buy a home. For those of you who selected D, 6 months prior to the date, you are correct. But why 6 months? It seems like a long time, right? Well, buying a home is likely the largest purchase that you will ever make. By meeting with your lender and getting pre-qualified and pre-approved well in advance, you will have time to determine what you need to do to get ready for this big purchase. For example, an analysis of your credit profile might determine your credit score is too low to obtain the best financing, or that there's an odd bill or collection account showing up on your credit report. Sometimes buyers need to restructure other debt to qualify, and other times buyers simply need to help determine a budget to save the down payment and determine what they'll need. By beginning this process 6 months before you move, you will have all the time necessary to get your ducks in a row, so you won't have any surprises. So heed the words of Ben Franklin and be prepared to put yourself in the best possible position. Your licensed professional with Homeowners Financial Group can help you with beginning this important step and will help you take the time needed to successfully map out your home purchase in advance. So call us today, and remember, we're always here to help.
Homeowners Financial Group's Market Minute, an equal housing lender. Follow us on Facebook and Twitter.
Homeowners Market Minute, your market update for what's happening in your neighborhood.